I think intrinsic value is actually very important to people. And yes, you can get good returns off crowdfunding and crypto. And to be honest, I'm not saying you put all your money in gold, but I just think that you should have some in something that's tangible that you can't print. And obviously, you can't print gold or silver. So, I think that it makes sense to have some.
On this episode of Early Bird, Simon Popple, Managing Director of Brookville Capital. Simon joins the podcast today to talk about what to look for when investing in gold stocks, including the advantages and disadvantages of investing in gold. If you're an investor looking to stay on top of the latest market trends, then you're listening to the right podcast. This is Early Bird, and I'm your host, Stephen Lerner. Before we get to today's discussion, let me tell you how you can save time and beat the market through Early Bird, a free daily email newsletter featuring commentary about the latest trends in stocks, cryptocurrency, and equity crowdfunding. Early Bird is designed to help individual and non-professional investors stay on top of all of the critical investing trends. The newsletter is 100% free and is sent to your email box each weekday morning. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, today's discussion. All right, Simon, welcome to the Early Bird podcast. How are you doing today?
I'm very good, thank you.
Well, thank you for joining us. We're going to be talking about what investors should be looking for when considering gold stocks or gold ETFs. Before we get to that, Simon, in about 30 seconds or less, what should the audience know about you and your background?
Well, my background basically was a typical sort of MBA investment banker. I was one of the youngest, or actually was the youngest director of one of the world's largest private property companies, but left property over 15 years ago to get into commodities, in particular gold and silver, because I saw they had a bright future. I probably left property a little bit early, but I'm very pleased I did. And I think gold and silver have got a fabulous future over the next few years.
So let's get into that since you kind of started talking a little bit about the gold. You feel strongly that investors should have a portion of their portfolio in gold. This, just so our listeners know, this discussion is just for entertainment purposes only. Always consult a financial professional regarding what you should do with your investments. But Simon, you feel strongly about having gold in a portfolio. Why is that?
Well, gold's been around for thousands of years. It's got form, it's got track record. I think you should have some. There's lots of different ways you can invest in gold. So what you have very much depends on, what you want it for and where you are in life and how old you are and many things like that. Mm-hmm. You've got physical gold, which is a lot less risky than, let's say, junior mining stocks, but junior mining stocks can be quite life-changing if you pick the right ones. Yeah, I think it's a really interesting asset class, and I think everyone should have at least some in their portfolio.
Why is that? I mean, look, I'm all for having some alternatives. I'd be a hypocrite if I said don't have any alternative investments whatsoever. But when you look at so many options today for alternatives, whether it's cryptocurrency, whether it's equity crowdfunding or real estate, or so many different options out there that investors can get into, why is gold still considered a good option for some people?
Well, I think you need to sort of go back to basics. Gold is intrinsically valuable. I think it's probably one of the only global assets. Crypto and real estate. Now, real estate in New York is worth a lot more than real estate, let's say, in various other states in New York, and likewise, real estate in London here in the UK is worth a lot more than real estate elsewhere, because you've got geography is very relevant in terms of investments, and you know, here in the UK, my house is valued in sterling. I earn money in sterling. My pension is in sterling. And what I love about gold, it's the same if you're in the US. Here is an asset class that is actually not tied to one currency. It's considered valuable in many different currencies. So
Yeah.
I think that it's a good diversifier.
It's not tied to currency or necessarily where stocks are going. It makes total sense. But Simon, what about other alternatives? You can invest in silver that may not be tied. Like I said before, you can invest in cryptocurrency or real estate or startup investing or equity crowdfunding. Many different options out there that are not tied to the dollar or tied to the broader market. What makes gold so special?
Well, I mean, I'd actually put silver in the same bucket as gold, to be honest. But I think that what makes them special is that they've got intrinsic value. And if you go anywhere in the world with a piece of gold or a piece of silver, it's viewed as valuable. Crypto, the laws could change against crypto, and good luck if you buy your partner a crypto ring. I know that my wife would be very annoyed if I did that. She'd much prefer a gold or a silver ring, but I think intrinsic value is actually very important to people. And yes, you can get good returns off crowdfunding and crypto. And to be honest, I'm not saying you put all your money in gold, but I just think that you should have some in something that's tangible that you can't print. And obviously you can't print gold or silver. So, I think that it makes sense to have some.
Let's continue on this topic about the benefits of gold investing, especially with gold stocks. It's often said that gold is a good hedge against inflation, something that obviously, as the world is still dealing with some degree of inflation, it's still something to consider. Talk a little bit about that, Simon, how it is a hedge against inflation and other benefits of investing in gold.
Yeah, I mean, I think gold is often considered a safe haven asset, a hedge against inflation. I think you have to accept that the gold price does go down as well as up, and because inflation generally always goes up. Is it a perfect hedge against inflation? No, it's not. But I think over the longer term, it's done very, very well. And I've got a free report that I'm happy for your listeners to have a look at called 3 Misconceptions of Investing in Gold. And within that, I've got a breakdown of currencies, and it just shows how well gold has performed in different currencies. And I think that, that's very relevant because a lot of people, there's one thing investing in an asset class, but you need to remember the currency you're investing in as well. And so if the asset, you need the asset class to do well and the currency to stay stable. And you could be in a situation where the asset class does very well, but if the asset goes up by 10% and the currency goes down by 10%, net you're kind of you're breaking even. And so currency is very, very relevant in terms of any investment, but it's a point that seems to be lost on a lot of people because they tend to look at it purely in their own currency terms, which is not always the best way of looking at it.
Good point on that. So we talked about the benefits of investing in gold. Let's talk about some of the disadvantages. It's not a perfect investment. There are a lot of problems with investing in gold, especially as a lot of critics might say is all it is a fear-based investment. What are some of the disadvantages of investing in gold?
Well, I mean, I think this is one of the sort of, if I'm honest, one of the sort of misconceptions, because I think a lot of people think, you invest in gold, you're going to have gold lying around the house, which is simply not true. They say, gold doesn't give an income. Physical gold, you're absolutely right, it doesn't. But if you invest in shares, Newmont has got a market value of $34 billion, yield of 3.9%. So does it yield less than you get in a bank account? I know maybe a little bit, but you've got the potential of capital gain as well. And not only are you exposed to gold, you're exposed to many other commodities. So I think there's gold is probably misunderstood. I think is probably the best way of describing it. And because of that, I think that people ought to have some in their portfolio because yes, you're right. There are disadvantages. The gold price does go up and down, but I think realistically, any asset class goes up and down. And I was told, we talk about investments. Never to love anything that can't love you back. And I know gold doesn't love you back, but if I'm honest, neither does property or many other asset classes. So I think that if gold does well for you, don't go crazy. Likewise, if property does well for you, don't go crazy. And unfortunately, I think people have gone a bit crazy, and they've had a few investments that have worked out in certain asset classes, and they've ended up putting a lot more than they intended into it. And that's great when they're going up, but you have to remember that things go down as well.
Good point. When we return, we'll hear from Simon about how to examine gold stocks, and we ask if 2023 is a good year to invest in gold. But first, let me tell you how you can become a more informed investor through Early Bird, a free daily email newsletter. Early Bird has commentary on the latest events and trends in stocks, cryptocurrency, and crowdfunding. With Early Bird's daily weekday email, investors can quickly stay on top of the trends and beat the market. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, back to today's discussion. So, Simon, today we're talking about investing in gold, and we've already laid out the advantages and disadvantages of investing in gold. For many of our listeners, they want to be able to consider a gold investment through the traditional markets, gold stocks, gold exchange traded funds. Simon, what should investors look out for when investing in gold stocks and gold ETFs?
Well, one thing I do with my, I've actually got a gold package out, which is a book called Beginner's Guide to Investing in Gold, which I think is useful. But funnily enough, what I thought was more useful when I put it together was I looked at the top holdings of many different funds. I think there's probably 30 or 40 at least that I've covered, and you've got to remember these are funds that professionals are investing in. They're in many cases investing millions of dollars. And, if you're going to look at gold stocks, I think that, there's a lot to be said for looking at what, some of the big players like Fidelity and BlackRock, what they're investing in, because they've done an awful lot of work and an awful lot of research on these companies. And, obviously, you need, as you said at the top of this interview, you need advice from a financial advisor and stuff. But I think it's incredibly helpful, and it saves you an awful lot of time if you're looking at a few companies that some of the larger players have invested in. And on that subject, I would suggest people have a range of different investments. So they're diversified, so they're not all in gold, not all in silver, not all in Canada, not all in Australia, not all in the US. They have a nice mix of investments. So they're not completely exposed to one country or one commodity.
When you're looking at gold stocks, though, or what should investors keep an eye out for? Anything particular in terms of operations or management, or anything about fundamentals about the company, the price to equity valuation? What should investors keep an eye on, and what should they look at when they are examining these types of stocks?
Well, again, this is something I cover in my book, but there's I think one of the misconceptions about gold and silver companies and any commodity company is they're all at different stages of the process. You get some that are out and out explorers that I call my forwards, and some of these you can make sort of 50, 60, 70 times your money. You can make an extraordinary return. But they can take years, and they may not work out. You could lose money. You could lose a lot of money. Then you've got what I call my midfielders, which are companies that are probably new to production. And then you've got your defenders, which are probably just producing one commodity. And then you've got your goalkeepers that are producing a lot of commodities. So a lot depends on, what you're looking to do and what you want to achieve. And I think this is again, a bit of a misconception in terms of investing, that people tend to look at it from what return can I get, and I think that's probably the wrong way of looking at it. You want to look at it from the other end and say, what level of risk am I comfortable with, and then putting a portfolio together based on that. Without giving too much away in terms of what I like to cover, I use something called the bridge system, which stands for balance sheet, resources, infrastructure, diversification, grade, and exploration potential. And I find that's a useful kind of checklist to use when looking at a company. To be honest, it tends to be more the forwards where you need to use it, because it's already been used on midfielders, defenders, and goalkeepers. But it's quite a good sort of checklist, I suppose, for want of a better term, when you're looking at companies.
Great advice, Simon. I look at the stock market in 2023 overall. It has been a solid year. Stocks are mostly positive this year. But then I look at gold stocks and gold ETFs, and most of them are down this year, and many of them are struggling. Why are gold stocks struggling in 2023? Is this a bad time to invest in gold?
It's a very good question. I mean, I've always been taught to buy low, sell high, and you're absolutely right. They've had a rough time, to put it mildly. But I think in this day and age, I think there's a lot to be said for investing in things where there's perhaps more upside than downside. And so I actually think now is a good time to be investing, funnily enough, because you're investing more towards the bottom than the top. But as I said earlier, I wouldn't advocate putting all your money into any particular asset class, but I think there's some compelling reasons why you should at least have some investment or some exposure to gold and to a lesser extent silver.
It's just so weird. Didn't the price of gold reach an all-time high this year? Shouldn't that translate to higher stock prices for gold stocks? It's just so weird that doesn't really correlate to.
Well, it is weird, but I'm a great believer actions speak louder than words, and if you look at what's happening in the Gold Council, the World Gold Council, central banks are buying gold hand over fist at the moment, and one of the things I would urge people to do is to at least set up an account and have. Even if you just buy one gold coin, I mean, if all this sort of silver coin, whatever you want, but if all this blows over, you can always sell it back. But if you can imagine, if we have a real crisis, I think that there'll be a huge number, and I'm talking about thousands, tens of thousands, potentially millions of people wanting to set up accounts in gold and silver, that's not a queue I want to be in. I want to have my account set up now. And I think if there's a takeaway from the chat that we're having, I strongly suggest to people that at least have an account set up. And if all this blows over, then you can always sell your gold or silver, whatever you've got back. But at least make sure you don't join that queue.
You bring up a great point. Opening the account, that's potentially an option there. Well, real quick, Simon, what advice would you give to investors who want to get started with investing in gold?
Well, I mean, as I say, I've got a book, The Beginner's Guide to Investing in Gold. I think it's helpful for people if they're serious about getting exposure to the sector. If they don't really want to spend the time reading a book, then at the very least, I'd suggest that they set up an account with a local trusted dealer, someone who is well regarded, and at least have some gold or silver. I think it's an important thing to do, as much for your family and as for yourself. So I definitely at least do something. Don't just listen to this and do nothing.
Oh, absolutely. That great advice. Simon, thank you so much for coming on the Early Bird podcast to discuss investing in gold. I really do appreciate it. But before we wrap up the discussion, I just have one final question for you, Simon, and it's the most important question for today's discussion. That question for you, Simon, is if a genie were to grant you 3 wishes, what would those 3 wishes be?
Oh, wow. What a good question. Well, I suppose I ought to answer this in the context of gold, but I mean, if you look at what's happened with debt and gold, when debt goes up, the gold price tends to go up. So I can't see any reason why debt will go down. So I think the gold price has got a good chance of appreciating. So I think that's probably my first wish. I think that my second wish is that gold companies tend to follow the gold price. You mentioned quite rightly earlier that the gold price has done very well. But interestingly, silver. I mean, I'm not sure what the silver price is at the moment. I think it's probably only about $21.50, $22. But it has been as high as $50. And so, my other wish would be that the silver price picks up. And I know my third wish, I suppose, is the more people invest in it, because they spend all their lives earning money, and it's all very well having hundreds of thousands or millions of dollars in the bank, but I think you should have some gold, even if it's a few $100. You've got to have something.
Thank you again to Simon Popple for sharing your insights on investing in gold. And thank you to everyone for listening to today's discussion. We'll be back next week for another episode of Early Bird. Have a great day.